So investment banking and then moving into a business which was very, very different. Tell me a little bit about your journey. How did investment banking happen and what did it teach you uh, as a professional, as a human being?
Specifically, you're thrown in the deep end of the sea where you need to learn how to swim on your own. And this industry actually teaches you a CEO's mindset, a CXO's mindset. It's not just about one specific function in a corporate domain where you climb up the ladder over the years. This industry actually turbocharges your journey. We understood that there is space for not just one but multiple domestic brands to flourish. Worked very, very closely with the promoter family for 2 years, interacted with a lot of well respected names on the investment side. Idea is you should, and it'll sound slightly cliche, but you should follow your mind and your passion in a right balance. Being a startup or multiple startup, it makes zero sense.
No, I think not even being a founder or co-founder, maybe probably joining a corporate where you're seeing a business more closely.
Honestly, it wasn't about wealth creation because when I got this opportunity, the idea of wealth creation, the back end calculation was very, very myopic. I'll start with the lowest step. When COVID struck, so that was our lowest step because at that point in time there was a leadership exit that happened.
Hi guys, my guest for the show today is Piyush Singh. I completely admire his journey. He spent over a decade in investment banking and then took a very, very beautiful turn in his career. He joined a platform called Campus Active, where when he joined the platform had already done a 0 to 1 journey. He stood with the platform and did a 1 to 10x journey, led a very successful IPO. He recently moved out of Campus Active, so in his last avatar at Campus Active, where he was ex-COO. Welcome, Piyush, on the show. Glad to have you, at Game Room.
Thanks, Swati. Thanks for hosting me, and it's a privilege.
So, Piyush, so investment banking and then moving into a business which was very, very different. Tell me a little bit about your journey. How did investment banking happen and what did it teach you uh, as a professional, as a human being?
So Great question. So, investment banking for most of us, especially a fresh B school aspirant, is like the holy grail. Most of us either wants to get into investment banking or private equity because this is the most sought after role. And uh, trust you me, it's not an easy journey. Getting the foot in the door itself is very, very difficult because India is a competitive market. There is no dearth of talent in this country. But once you get in, it's all about a mix of hard work and smart work, and this industry teaches you a lot. Specifically, you're thrown in the deep end of the sea where you need to learn how to swim on your own. You in your very formative years, say as an analyst, and you've been hiring for this industry for the longest time. You know. The smartest of the chaps are put in front of all the CXOs. You have to deal with them. The idea is not just to do some number crunching on Excel, but to understand the intrinsic nuances of a business. So it's very, very important for you to understand कि India में business होता कैसे है. The ones who understand this thing, they become so seamless in this industry. It's just like a fish in the water, right? So once you understand that ये nuts and bolts हैं business के, इस तरह businesses construct होते हैं, इस तरह इनका scale up हो सकता है, then you are going to flourish in this industry. And this industry actually teaches you a CEO's mindset, a CXO's mindset. It's not just about one specific function in a corporate domain where you climb up the ladder over the years. This industry actually turbocharges your journey in that sense. It gives you that perspective. It gives you that access to knowledge, to insight, and that's why we have seen so many entrepreneurs coming out of this industry. Be it the investing part, be it on the sell side, banking side. So even in my case, I was fortunate that I got to cover some of the most exciting sectors in this country, which are the booming sectors. Like almost for a decade, I covered consumer, healthcare, and building materials. These sectors flourished as the India story flourished. So not only coverage, I also got to be part of a lot of marquee deal making in this sector, which gave me this much needed exposure in terms of how businesses are built over, say, decades or over multiple generations. And that's how my journey had been in terms of investment banking. I'm very gratified to look at it in the hindsight that it's been satiating in so many ways. And almost after a decade, when this entire campus activewear thing happened, before I joined campus, I was an advisor to the promoter family for 2 years. We were running a sell side mandate, and this was a very unique mandate. The company didn't need funds. Company was flourishing. It was still one of the most respectable names in the sports and leisure footwear side, so far as domestic market is concerned. And India still had that aspiration for all the international brands. So we understood that there is space for not just one but multiple domestic brands to flourish. And the perspective was very, very unique in this transaction itself. Idea was to get in a partner who can help us create the most admirable and India's leading sports and athleisure franchise. The idea was not to get money in, because business was cash rich, business was self sufficient in its own way. The idea was to attract talent, because talent is something that we all vehemently believed is going to take us from 1 to 10 or to a much larger scale. So worked very, very closely with the promoter family for 2 years. Interacted with a lot of well respected names on the investment side. Finally, the family had an alignment with TPG, which is now amongst the world's top five asset managers globally, with more than, I think, $125 billion invested throughout the world, coming in as the lead of the consortium. But in this transaction, there was a unique mix. We not only got a financial sponsor to back us with all the scale up nuances that they had seen throughout the journeys. We also got in a family office, which is QRG, the family office of Havels. So we also got that strategic perspective. So it was the best of both worlds for us. So that consortium came in September 2017. We had showcased a certain roadmap that from 2017 over the next 5, 7, 10 years, how we are going to scale this platform up, and how exactly are we putting a method to the madness in terms of what are the initiatives that we want to do. Got a lot of positive feedback from both the financial sponsors and the strategic backers. And it kind of intrinsically in my mind also, I had a lot of faith in the journey from there on. So fast forward 6 months, basis my conversation with TPG and my comfort with the founder family. I also decided to jump aboard and be on the other side, not as an advisor but as a full time contributor to the franchise, and help them scale up the platform. And that's how the journey actually started. Um, Now it's a very interesting journey from 2017 till 2022 May, when we eventually went public. There were multiple ups and downs and very interesting scenarios that we went through together as joint stakeholders, the sponsors, the founders, the employees, which included myself. And it's in the hindsight, it's been a really gratifying journey so far.
No, interesting. You've covered a very long journey in a very, short time. I'm going to dig deeper into, the various aspects. So, you mentioned about investment banking that it, in some shape or form, teaches you how to do business. Back when you chose investment banking as a career, I think investment banking, consulting, and buy side was probably the most sought after career. Things, of course, are a little different now. So, would you advise a 21-year-old to look at investment banking as a career, or just, maybe join a startup, or maybe join a company wherein you can actually be an operator and, run a business?
Uh, nice one, and it's a tough choice. Actually, it all depends on. See, let's keep the fancy element out here.
Hmm.
Idea is you should, and it'll sound slightly cliched, but you should follow your mind and your passion in a right balance.
Hmm.
Idea is not to join either of these careers just for the harping value that you get out of it, or the boasting value that you get out of it. Idea is where your true passion lies and what exactly do you want to understand. We all understand that at the age of 21, it's a little hazy for a newcomer to make complete sense, but there's a lot of help available in terms of making the right choices. If you have a brilliant idea and you have conviction and you can slog, there is nothing better than being an entrepreneur and being a startup founder. But just for the bragging rights, it makes no sense that eventually I don't have a vision for a product market fit. I don't have that clarity on how we are going to scale up, at least for the next 2 3 5 years. And just to sound cool that I'm a founder or a co-founder, I'm just doing a startup or multiple startup, it makes zero sense.
No, I think not even being a founder or co-founder, maybe probably joining a corporate where you're seeing a business more closely.
So then there is a difference, in my opinion, between being just an employee and being truly aligned with the passion. So
Hmm.
whether you are an investment banker or you are joining a startup or you are joining any other corporate,
Hmm.
if you're passionate about what you're getting into,
Hmm.
then it's no longer a job or a
Hmm.
role. It's no
Hmm.
longer 9 to 5.
Hmm.
Then you are owner
Hmm.
in the truest
Hmm.
sense,
Hmm.
and which is the secret sauce for any of the industries. Then it becomes agnostic of
Hmm.
your choice, that
Hmm.
whether you join buy
Hmm.
side or you
Hmm.
join investment
Hmm.
banking or you join a startup
Hmm.
or a conventional corporate for that
Hmm.
matter, be it Indian or
Hmm.
MNC. Idea is, are you enjoying the journey or not?
Hmm.
Idea is not to get bored. Idea is
Hmm.
to give it a proper shot. Idea is
Hmm.
to just understand what are you getting into,
Hmm.
and then live it religiously for some
Hmm.
time. Make an honest choice, make an
Hmm.
honest attempt
Hmm.
before you decide to either stick to it and flourish out there,
Hmm.
or move out or branch out.
Hmm. Hmm.
So that's the whole game,
Hmm. Hmm.
right? Now, so far as private equity, investment banking, and all these things are concerned, I would say I have very high regards for sell side investment banking. While the holy grail is still investing, the buy
Hmm.
side thing, eventually all of us wants to move to
Hmm.
that
Hmm.
side in our formative years.
Hmm.
But it teaches you one very different skill set. It teaches you selling a service.
Hmm.
Selling a product is still easier to a certain extent
Hmm.
because you have a brand to back, you have
Hmm.
a certain product line to back.
Hmm.
But here you're selling something which is almost based on 100% success.
Hmm.
So you're selling a concept, you're selling
Hmm.
an idea, you're
Hmm.
selling a transaction,
Hmm.
right? And you are going to, you as a franchise, as an
Hmm.
investment banking franchise, are only going to benefit out of it once the transaction sees the light of the day, where
Hmm.
once the both the counterparties sign on
Hmm.
the dotted line.
Hmm.
So I believe this is the hardest form of selling,
Hmm.
and those who excel at this
Hmm.
are bound to flourish.
Hmm. Hmm.
So then anything else you can do with much higher confidence level, because this
Hmm.
is something where your fortunes totally depend on the success. And
Hmm.
it's not like it's milestone based,
Hmm.
like, and no disrespect to any other industry, in consulting it's almost
Hmm.
milestone based, that you
Hmm.
do this,
Hmm.
you earn this, you do this, you
Hmm.
earn this, and
Hmm.
you show some results
Hmm.
as part of execution, if that's part of your
Hmm.
mandate, then you earn the balance.
Hmm.
But in this industry, in
Hmm.
investment banking specifically, most of us get to see that final paycheck only
Hmm.
once we have delivered the
Hmm.
transaction.
Hmm.
That's the hardest form of selling.
Hmm.
So it teaches you humility
Hmm.
in a very different format.
Hmm.
So if I have to quote the example of my own transaction, campus itself, we ran the transaction for 2 years.
Hmm.
We ran it twice
Hmm.
because all the parameters for 100% success were not met in the first attempt.
Hmm.
We had amazing response,
Hmm.
amazing interest from the buy side fraternity,
Hmm.
but specifically what the founders were looking for
Hmm.
was not getting ticked in the checkbox.
Hmm.
We had to rerun the entire thing afresh. We had to add that freshness element. We had to redo everything on the whiteboard so far as strategic roadmap was concerned.
Hmm.
We had to build that that conviction,
Hmm.
because buy side again is a very
Hmm.
tightly knit
Hmm.
fraternity. And once the news is out that the deal was out there in the market, then it becomes somewhat stale, and people have
Hmm.
different versions, different
Hmm.
stories
Hmm.
altogether. Selling something back to back
Hmm.
in a consecutive year, it's very, very difficult. So
Hmm.
it makes you humble. It teaches you
Hmm.
a lot of
Hmm.
humility in that sense,
Hmm.
that see, let me stick to the facts.
Hmm.
Let us talk about the numbers. Let us talk about the game plan. Let us
Hmm.
see if there is any true conviction in the market, because you'll see a lot of froth.
Hmm.
People love to evaluate. People love to see what the industry is all about.
Hmm.
People love to take a lot of gyan. They
Hmm.
try to
Hmm.
absorb and then move on to the next best
Hmm.
thing in the
Hmm.
same sector.
Hmm.
So here, so it was very, very important for us to figure out the seriousness, the
Hmm.
intent of investor, and that's where TPG came in for us.
Hmm. Hmm.
But running the process
Hmm.
consequently,
Hmm.
consecutively for
Hmm. Hmm.
2 years back to back
Hmm.
was the hardest part in my
Hmm.
decade-long journey of investment banking. So
Hmm.
it taught me a lot of things. That
Hmm.
see, you'll see failures, but
Hmm.
eventually success is what matters,
Hmm. Hmm.
and you have
No.
to see the light at the end of the tunnel,
Hmm.
right?
Hmm. Oh, interesting. So Piyush, you as a so I think uh, understanding of business and being humble and probably selling a service are three things that you really derive from an investment banking career. But if I have to ask at a personal front, at a human level, Piyush entered investment banking as a certain person, and then when you moved out of investment banking, do you think there was a shift in the type of person you are? Did what did you carry at a human level from an investment banking standpoint?
I was far more confident, and and I got a lot of clarity of thought.
Hmm.
So as a fresher, when
Hmm.
once you're entering this industry, your thought process is all over the place, because you're just trying to absorb so many
Hmm.
ideas, so
Hmm.
many constructs,
Hmm.
and how to put them together. And The biggest gift that I got out of this industry was how to seamlessly put the pieces of that jigsaw together,
Hmm.
in a in and create the right narrative around it.
Hmm.
The art of storytelling,
Hmm.
because this is what this industry is all about.
Hmm.
Numbers and Excel sheets just support your storytelling.
Hmm.
Your storytelling has to be excellent,
Hmm.
and this holds true for any business as well. So
Hmm.
this is my biggest takeaway from this
Hmm.
industry.
Hmm.
If done correctly, it
Hmm.
teaches you a lot about putting the narrative together in the most seamless way, which
Hmm.
becomes easier for the other person to absorb and
Hmm.
appreciate, and
Hmm.
that's how things move forward. Be it
Hmm.
your counterparty in a
Hmm.
business, or be it another deal maker,
Hmm.
or
Hmm.
be it your own stakeholders.
Hmm.
So
Hmm.
this is what this industry taught me.
Hmm.
To be very, very candid with you.
No, very. I think this is very interesting, and I've spent a lot of time, with bankers, and I have a lot of respect for what they kind of do. But then, Piyush, most of the bankers who I have spoken to, 99% of them, eventually they want to land up in buy side. You also took a very different path. You planned to join uh, a family run business which would have a very very different nuances as compared to what buy side would offer. You also plan to join that at a time wherein maybe this was not so fancy. Right now everyone wants to join a mid market business because there is a precedence of wealth creation. So what made you take that plunge instead of a buy side move?
So Swati, my leap of faith was essentially based on two, three things. One, given I had already spent good 2 years with the founding family, so I had a lot of comfort and respect for them, because I knew that they always promoted the right set of
Hmm.
ideas. Given it was a multi-generational family business, was slightly different from a
Hmm.
first generational startup or things like that. Second, the private equity folks who came in, I was associated with them as acquaintances for good decade. So they also gave me a lot of comfort around how. So the idea was not to get into a specific role. They created a role around me, which
Hmm.
gave me a lot of comfort. So taking that leap of faith was, they made it easier for me in
Hmm.
that sense. Again. Uh, End of the day, it was a leap of faith, because I
Hmm.
was getting into a conventional family run
Hmm.
business, which will present its own set of challenges. Not talking about this specific platform, any family run business which is running for more than 2-3 decades will have its own set of challenges, own set of understandings, own set of knowledge, which you'll either add on to, or you want to change a lot of things. And the journey is not that simple. But again, you have to see who your sponsoring stakeholders are. if they can create that comfortable, conducive environment for you, which happened in my case also, and I've been super thankful to all these guys. The same thing, you're bound to succeed,
Hmm.
because then it becomes a more constructive and collaborative
Hmm.
effort in that
Hmm.
sense, and not just about a struggle to survive.
Hmm. Hmm.
So your operating environment is the key here.
Hmm.
I had my own fair set of challenges, but end of the day, if I have to look at this entire journey in the hindsight, it's been super gratifying for what we achieved together as a group.
Hmm. But do you think at some point family-run businesses to attract talent like that of yours, or good professional talent, need to have institutional investors somewhere? The leap of faith comes, when you have those institutional investors.
That was the secret ingredient in our case.
Hmm.
I won't deny the fact, and that was a very specific requirement in getting a top-notch blue-blooded private equity investor on
Hmm.
the cap table, because this. See, everybody wants talent. Now, people talk about the building blocks of a successful franchise or a successful business. Some would say that it's about their manufacturing. Some would say it's about their distribution strength. Some would say that it's about their shared market leadership. But all of these are either the infrastructure side of things or just a derivative. So, like market share is a derivative, or the some aggregate of what all you have created as a franchise. Distribution and your manufacturing setup is again part of your hard infrastructure,
Hmm.
right? But you need brains to run that, so
Hmm.
human capital becomes paramount. So our biggest learning in this entire journey is, before anything else, you need to have the right set of human capital on board, because sooner than later you'll realize that whatever plans are there on the paper, execution has not happened to the same extent, because you were missing the right set of folks.
Hmm.
Now, attracting those right set of folks, and I'm not talking about the top of the league talent, I'm talking about the most relevant fit here. And the most relevant fit could be a shop floor executive who has the expertise to run those particular set of machines with the optimum efficiency
Hmm.
levels. So getting any kind of talent at any level, be it at the entry level, mid management level, or the senior leadership level, requires that comfort, that leap of faith. In my case, it was very personal, because I knew all
Hmm.
the leading stakeholders out there.
Hmm.
But that's often not the case in when we are out there in the market scouting for talent. So that's how we started building onto that leadership
Hmm.
stack. I came on board, then I started doing the advocacy, and then others joined in, and then we had a bigger cohort, and the bigger cohort gave comfort to other mid management guys, and that's how the entire stack was built out. But you're very very right that that initial comfort is very important, because saying this, that हम प्रोफेशनलाइज कर देंगे, हम चेंज हो जाएंगे, the story is floating around for
Hmm.
more than a decade now. But actually, living that entire story is a very different ball games. Very few family run businesses have been able to achieve that.
Hmm.
And the examples that, and those who have done this have really really flourished. You talk
Hmm.
about the Marico family,
Hmm.
they've done it. You talk about Burmans out in Dabur, they've done it. Those are the
Zerodha.
Zerodha is there.
Yeah.
Then again, it's not a multi-generational thing,
Yeah.
so
Yeah.
I
Yeah.
didn't quote them. And then about Campus Activewear itself, they've professionalized the setup to the largest extent, and they reap the benefits.
Hmm.
And that was one of the key reasons why we had a stellar IPO. End
Hmm.
of the day,
Hmm.
the platform was already there five
Hmm.
years back.
Hmm.
We ended up creating something bigger out of it in the
Hmm.
next 5 years, and we showcased a very differentiated story in the market, only on the back of professionals.
Hmm.
Now, getting those professionals on board itself,
Hmm.
making them comfortable enough to take this leap of faith,
Hmm.
again, is a chicken and egg story. You
Hmm.
need to get the right set of people out
Hmm.
there
Hmm.
from whom they can derive that
Hmm.
comfort.
Hmm.
प्रमोटर से अगर वो कंफर्ट
Hmm.
आ ही रहा होता
Hmm.
तो फिर इतना कुछ करने की जरूरत
Hmm.
नहीं होती है. प्रमोटर्स आर स्टेलर, बट
Hmm.
एंड ऑफ द डे इट्स देयर बिजनेस. पीपल
Hmm.
वांट टू अंडरस्टैंड कि प्रोफेशनल्स कहाँ हैं, एंड
Hmm.
आर दे गोइंग टू लिव अप टू देयर प्रॉमिस दैट हम
Hmm.
प्रोफेशनलाइज करेंगे कि नहीं करेंगे.
Hmm.
दैट बैकिंग हैज टू कम फ्रॉम एन एक्सटर्नल स्टेक होल्डर.
Hmm.
So for us, that external stakeholder was the investor consortium that came on the cap table.
Hmm. Hmm. So coming on the IPO, why do companies do IPO? There are some companies which choose to do IPO, and there are some companies who don't go for IPO. Uh, so if you're doing well, if you're making good money for yourself, why would you want to do IPO?
So there are two or three reasons. See, in our case, I would say, and I would start with our case itself, and then we can generalize this entire thing to a larger extent. We had a certain set of investor on board, and it's a finite life investment. We all know when buy side people come in, they have a certain fund life. In our case, also the fund life was anywhere between 5 to 6 years.
Hmm.
Idea was to create a definitive business and a scalable business in this journey of 5 years. We were fairly successful, and to give them exit was one of the reasons. Other than that, it once the company goes public, that's another big milestone which helps you attract a different kind of talent
Hmm.
altogether. Till the time you're private, people say that okay, fine, we are taking
Hmm.
leap of faith. Once you go
Hmm.
public, India gives you a very different respect
Hmm.
as a franchise.
Hmm.
It again helped us attract and unlock those talent potentials which we were unable to do over
Hmm.
the last 5 years
Hmm.
as a private franchise.
Hmm.
And third important reason was the entire wealth creation journey,
Hmm.
which is important these days for the professionals who have taken that leap of faith in the formative years. You have to provide them a liquidity just like your investor partners, right?
Hmm.
So the ones who took that leap of faith early on were granted with ESOPs. Promoters were gracious enough; they created an ESOP pool early on. Once we had done that value creation, converting that entire value creation into your wealth, into a wealth creation journey was also one of the reasons. You have to give that liquidity
Hmm.
to everyone. And fourth, and one of the most important reasons is your journey from 1 to 10x is one journey. Your journey from 10 to 100x needs different kind of support, different kind of you can say exposure in the public markets, and
Hmm.
a different set of investors
Hmm.
altogether.
Hmm.
So getting all those blue chip
Hmm.
public market long only
Hmm.
investors is something that you aspire for,
Hmm.
because this is where your true journey starts. This is
Hmm.
where your true test starts.
Hmm.
Before that, it's more about a selected set of people sitting in boardrooms, एनुअली अपना एनुअल ऑपरेटिंग प्लान देख
Hmm.
रहे हैं,
Hmm.
उसके अगेंस्ट परफॉर्मेंस ट्रैक कर रहे हैं,
Hmm.
19-20 हो रहा
Hmm.
है तो वो चल रहा है डिपेंडिंग
Hmm.
ऑन हाउ मच फेथ डू यू हैव इन द
Hmm.
franchise. But this is where your true metal gets tested
Hmm.
quarter on quarter.
Hmm.
This is where the heroes gets differentiated from the laggards. The leaders actually get differentiated. You look at journeys for Infosys and HDFC banks. They have given consistent. The idea is to stay consistent from here on, and this is something public markets teach you discipline in a very different in a very different format, because consistently वो ग्रोथ डिलीवर करना, वो प्रॉफिटेबिलिटी डिलीवर करना इज नॉट एवरी वंस कप ऑफ टी. You have to do it for say 2 years, 3 years, 4 years before people start taking you seriously as a true leader, and then they start rewarding you as well. We have seen HDFC Bank ka journey, we have seen Infosys ka journey, and those all look very good, and they give you that endorphin rush as well. But living that journey is a very different ball game altogether. Uh, while your private side journey teaches you a lot of humility and a lot of patience, this journey teaches you a lot of discipline. You have to stay consistent through and through. So that's why we also decided to go public. So it's a some aggregate of these 3 4 major reasons. I can give you a lot of theoretical reasons also, but end of the day, yeah, these 4 reasons is what mattered for us the most.
So how? So when you were in EY, you were in a very different environment, dealing with very different kind of bosses or managers. But the moment you made a switch to a family run business while TPG was involved, I'm sure the change would have been gradual. So uh, what mindset shift, what was the tactful tips and tricks that you kind of applied or used to make a switch from the world of EY to a world of a promoter driven setup?
One very practical advice: stay away from the rockstar syndrome, because we all think that the day I'm going to join this franchise, हम दुनिया बदल देंगे. It never happens,
Hmm.
because you have to understand and appreciate the fact that somebody has created this business over decades. It's a specifically if I talk about family run businesses in India, it's a multi generational build out that has happened, very very patiently, and they have immense set of knowledge both about the landscape, the industry, and the people as well. So the idea is to stay patient, find your ground, be humble, and operate with humility. Again and again I'm repeating the same thing, because if you get struck by that rockstar syndrome, that I am becoming impatient because I'm not getting enough latitude to make this changeover in the first 2 weeks, then you're not cut out for this. Idea is, first understand the landscape, first understand the mindset, start delivering in smaller portions, create that confidence in the minds of the not only the founders but other senior stakeholders who've been with the founders over the years, who have helped them create this franchise so far, before you bring in any major change in the way of working. You have to make them feel comfortable, you have to make them feel inclusive. There's no such thing called overnight change. There is no Bollywood or Hollywood saga going on here. That अचानक से हम बोर्ड में आए, कल हमने ज्वाइन किया था, आज आए, सब कुछ ओवरनाइट हमने चेंज कर दिया. It never happens. Then you are in for distracting value, not creating value. Idea is, understand it, be patient, absorb it, make suggestions, start delivering in smaller thresholds, and then go for the kill, because other people also need to have that confidence and faith in you, right? You should be a value creator, not a value destructor in that sense. So that's the whole idea, and that's the secret sauce.
But how much patience is the right amount of patience? Because look, I have seen both kind of stints. I have seen investment bankers move into a journey like that of yours, and have had your example of a very very successful operating journey. And I've also seen bankers move into an operating journey and eventually are in some shape or form frustrated and want to kind of come back. So what? So how much? So the question is, how much patience is the right patience?
It's equivalent to your pain threshold at times, and you're absolutely correct in the sense that at times, given the kind of background we are coming from, we become too impatient, and this is where the ones who have created this ecosystem for you to take that leap of faith come in and play that critical role of giving you enough or offering you enough comfort to stick around. I won't say कि मेरे केस में नहीं हुआ था. I also got jittery in the formative months. Both the founding family, they kind of counseled me that it'll happen. It takes time. We have seen it for 10 years. We have moved from X to Y. You want to go from Y to Z in say 10 months. It's not going to happen like this. Have faith, and also the investor partners as well. They also said that let's try this. Let's follow a fail fast approach. पूरी शिद्दत से करते हैं एक बार, नहीं होगा then we'll figure something out. But at least करते हैं ना. There is no merit in resigning to the fate कि होगा ही नहीं. So hoga nahi se fail fast is a journey, and it totally depends on your pain threshold. Some of us succeed, some of us don't succeed, and I would say your ecosystem plays a big role in that. It's not about that individual is a champion out there. It's also about who else is there in the supporting role in terms of giving you that comfort. So I was fortunate enough that I had a very good set of supporters and believers who gave me that
So
comfort to
these were your
flourish.
professional, friends, or these were, the internal
It's
stakeholders?
a mix of both.
Hmm.
It's about your professional ecosystem, your
Hmm.
acquaintances, the investor partners, the founding family
Hmm.
itself.
Hmm.
In fact, my CEO Nikhil and I, we grew in this business together. I mean, we still are very good friends.
Hmm.
We have lived this journey, and we used to exchange notes कि हमने ये देखा था, साथ में ये देख रहे हैं यार, इतना चेंज हो गया, इसके आगे भी कर ही लेंगे. Let's have faith. There were ups and downs. There were excellent days and there was not so good days. But this is what you call life. Every day is not the same,
But
and every day you can't hit the ball out of the park. Every ball is not meant for a sixer. You have to keep on taking those singles.
no, interesting, Piyush. But ये जो pain threshold है, so what was the need to even take that pain threshold? Because investment banking में भी ठीक ठाक पैसा बन ही जाता. So did you had the vision of probably a great amount of wealth creation, or what made you even take that pain threshold?
It honestly, it wasn't about wealth creation, because when I got this opportunity, The idea of wealth creation, the back end calculation was very, very myopic.
Hmm.
And God has been kind. The opportunity grew to a different extent. Now, none of us thought that it would be this kind of a stellar exit for, or this kind of a stellar listing of the platform. We all had our best case, bear case estimate saying that X jayega, wo jayega. We did much better, and thanks to Almighty for all that. The idea was for me personally, why I made the shift was. I had other opportunities, and you had represented me at that point in time at other franchises as well. It was becoming a little superficial for me that while I'm getting all those insights, I'm gaining all that knowledge, but end of the day, it's just about strategy, a paper plan, and some Excel numbers backing a future outcome. So I personally got that itch that I need to have some operating experience under my belt to understand and appreciate that do we really deliver things that we promise at the time of this investment on the private side, or it's like far and few. And if I have this kind of conviction that this is going to be the outcome or something directionally is going to be the outcome, why not experiment and live it out? Uh, Honestly, I didn't have any startup idea at that point in time, so I'll be very, very candid in that sense. But I always wanted some operating experience under my belt, and that's why I decided to take this plunge. So the entire journey of that leap of faith was a mix of comfort and my own itch to get some operating experience under the belt. Because otherwise, doing banking for the longest time, paisa ban jata, you are right, and I was doing fairly well in my career out there. I had other opportunities also to move out of a certain franchise and join another franchise and take another leap. But the idea was just to understand कि operations कैसे चलते हैं so that I have that holistic experience. आपको life में एक ना एक बार वो itch आती है, and it totally depends on you that whether you want to do it at that point in time or at a later point in time. It's your call.
And what did this operating career teach you?
Uh, it's a different kind of journey altogether. Now it's no longer a gift of gab, I would
Hmm.
say. It's more about if I'll put my mouth where my money is, because now I know what it takes to operate a certain franchise, what it takes to create a business. So it helps you understand and appreciate the fact that running a franchise as a corporate employee is very different. Creating something from scratch and then scaling it, incubating it, scaling it up, and then running it in a way that you want to run it or scale it is a very, very different thing. That actually gives you a lot of confidence in terms of creating, incubating, and scaling stuff. And you're no longer talking about those top layer superficial things that ये ऐसे हो जाता है and the first principle arguments that इसको ऐसे किया तो what, when, where, why. It's a far nuanced understanding of the business that ऐसे चलता है, landscape ऐसा है, ecosystem ऐसा है, these are the stakeholders, these are the vendors, these are the counterparties. If you have to scale it, it'll go like this. Then it the numbers start making sense. That at times we in my previous avatar we used to question the founders and promoters and some of the operators that why are you taking just a 10% or a 15% growth outlook, why not 25%? आप तो बोल रहे हो ये दो चीज़ें करेंगे हो जाएगा, बट जब आप करने आते हो तब आपको समझ में आता है कि दैट्स ऑल्सो अ जर्नी दैट यू हैव टू लिव, एंड every single element has its own fair share of successes and failures. So the net probabilistic outcome is something that you are able to visualize and appreciate in an operating role if done successfully.
So, do you think every investor should have an operating, journey before they become an investor? Do you think that will
Quite a
give
few
them
of
an
them,
edge?
quite a few of them have had their operating journeys beforehand, and that's why most of them are super successful investors. I won't say the other way around is not true. Some investors are very stellar without even having an operating journey, because I think they're able to visualize. Idea is to be smart enough to understand and segregate the nut and bolts and visualize what is the net outcome going to be. Whether you learn it the hard way by being an operator beforehand or afterwards. But I think that stint is very very critical for us to become good investing folks, be it about your own portfolio or be it about managing somebody else's portfolio as a GP. But this journey really is an incremental add-on. There is no downside in having this. Uh, it gives you that perspective in terms of understanding that how things really work, how systems really move, and how you, as part of some ecosystem or a landscape, going to create the differentiation, if at all.
So tell me about the highest and the lowest point in the journey of campus, active.
I'll start with the lowest step when COVID struck.
Hmm.
So that was our lowest step because at that point in time there was a leadership exit that happened, and uh, we were actually clueless that how are we going to scale from here on, or actually in the hindsight we were also contemplating that this shouldn't be a survival issue for us because churn happening at a time when the markets are not conducive, somebody very experienced moving out gives you those chills and night terrors. And while it was a very brief moment, and we bounced back really really well, um, but that was the lowest step. And the highest is obviously our public market listing. We were out there in the markets for not more than 8 months. Then Russia-Ukraine happened. When we were at our peak of non-deal roadshows, Russia-Ukraine happened, and every single banker on the street said that this is not a conducive environment. But we had faith in our story. We were the first ones to open the market back in April 2022. First ones to list. Got an amazing response. That was the biggest high to have in one's life, and I sincerely hope that all of us who are either founders or part of such operating journeys should get to live that kind of a journey. Um, I mean, without a doubt, that was the highest.
But what has campus activewear done differently as compared to other consumer businesses? What gave that high? Why you guys had this kind of conviction in your business?
Because we started with not so fancy things. Just to give you a complete perspective, there is so much jazz about building out consumer businesses, and no disrespect to D2C businesses, building out D2C natives. You get a certain scale up on all these platforms because it's a newer avenue for all of us. Uh, but building out a truly scalable business takes time, it takes patience, and it takes the right mindset, not just the investment. To start with, in our formative years, post the private equity investment, we started working on our not so fancy things like making our backends robust, making or curating a supply chain which was unheard of in this industry specifically, getting all our ducks in order, stacking everything together so that we have a really robust franchise in place. So if tomorrow we get an opportunity to scale up or scale down, it should be seamless. It should not give us create any kind of disruptions. So working on manufacturing, supply chain, getting things together, creating a central analytics function, a planning function, and not so fancy things, and then just integrating it with the help of technology with the front end functions like the distribution networks, and incubating newer functions, making them asset heavy, getting your hands dirty around that was something that helped us differentiate. Because the derivative that we got out of it was truly gratifying. We ended up creating a D2C, a truly D2C business, contributing almost before that. We started as a 500 crore franchise, which was B2B2C in nature. We were only doing primary distribution with no outlook around what is selling at the grassroots level. We had limited insight. So we had no understanding of how we should plan for the upcoming season. So we were facing conventional problems like inventory buildup in lean seasons and stockouts in peak seasons. Somehow we were not even focusing on solving them. The day we started focusing, we started appreciating the fact that there is so much efficiency lying out there which we should start harnessing now. So first 2 3 years went into that. Then the idea was to diversify revenue streams because it can't be a single pony story that you are just doing distribution and nothing else. So while we were digitizing our own distribution network, we also started incubating the D2C piece. Again, conventional wisdom that we received from the market was, you are just a brand and a product story. Focus on that. Leave everything else to the specialist. Outsource, outsource, outsource. But being the last entrant, we also realized that being a promoter driven setup, your notion is profitability first. Your notion is not to gather GMVs, or to do incessant burns and say that we have scaled up to a certain level, but profitability won't come in the next 5 years. So we are not building a jazzy or a fancy business. We are creating building blocks for a profitable business right from day one, where unit economics should make sense. Otherwise उस धंधे में मत घुसो, मत करो, because the promoters are not going to sponsor you for that. So we created a D2C business which was asset heavy, started doing everything in house, right from which now people have started doing of late, like cataloging, customer experience, pricing, inventory management, operations, warehouse, returns, reconciliation, everything in the D2C business, which is the hard part, because there are so many digital marketing, there are so many specialists available for the. But the idea was to learn everything and create efficiency and optimize the entire cost aspect of it, so that you start making some real profits, right? Only then you'll be able to truly scale it up. So that was another differentiating factor for us. By the time we hit capital markets, we had created a truly differentiated platform in this industry, the the largest in the country, both in value and volume terms. So we were the first brand, so to say, in this country to kind of scale beyond international brands, which are highly aspirational. And not just at an aggregate level, we were able to create a truly valuable D2C business here, which was not only the second largest in the country in just a time frame of 3.5 years, but also the most profitable SBU for us internally. And these are the factors which helped us differentiate, which the global investors truly appreciate, because they had never seen this kind of story coming out of India, in specifically in the consumer sector. They started comparing us with no Indian player, but with the Chinese folks.
Wow.
And that was like a global recognition for us, because they were mesmerized with the fact that you guys have created something which Anta or Leaning, the leading Chinese brands, did in 20 years. So you ended up creating the same kind of story directionally in 10 years time frame. 5 years for the distribution build out and 5 years for the another D2C build out. And they started getting that conviction that yes, finally India is able to create a franchise or a platform which can give these international brands a run for their money, because they had seen these stories unfold globally. If I have to give you some perspective about sports footwear, so there is always a home turf advantage for a domestic player. So you look at China, leading Antas are the leading ones. Nike has now regained its number one position after almost a decade. So these guys, and no other international brand is there in competition. So these are the top three, and their industry is almost $50 billion retail for sports shoes, compared to our industry, which is only $2.5 billion. Right. Then you talk about Western Europe, it's Adidas, Puma, Nike is nowhere. You talk about Americas, it's only Nike, then Under Armour, then Reebok came. Adidas struggled for the biggest time. Japan, again, it's Asics and Mizuno. UK, it's very different. It's Clarks and Brooks. So every single major economy had a domestic home turf advantage for whatever reasons. Cost leadership ho gaya, your distribution prowess ho gaya, understanding of the local landscape, or taste and palate ho gaya, yeah, nationalistic sentiments, or a combination of all these four. India somehow lagged in this entire thing, because we kept on inspiring for international brands or knockoffs for the longest time. So creating a truly Indian aspirational franchise which is affordable and accessible was our pivoting story. And this is something that people liked, and all our numbers also backed the story. We had 45% revenue contributions with maximum amount of profitability coming out of D2C, which they had never seen in India. They had seen this happening in US, they had seen this happening in China, but no Indian story was this kind of profitable. And then again, we had the largest distribution network, which took us good 15 years to build, which was backed by the not so fancy things of a vertically integrated manufacturing setup and state of the art supply chain, which was still missing in the industry, because lead time is a concept which gave us our right to win in this industry. So all those not so fancy nuts and bolts, gave us our right to win and offered us that differentiation, which public market investors loved. I know it's been a long
Hmm.
ramble, but
Hmm. Hmm.
otherwise, the not so fancy things
Hmm.
actually added to the glamour later on.
Hmm. Very, very insightful, Piyush. So tell me one thing, as a leader, how were you in investment banking, and how did you change as an operator from a leadership, standpoint? Was there a change in the leadership, style?
Not really. I'll say the cardinal principle stays the same. Keep your folks together, because
How do
without,
you keep your folks together?
you have to continuously motivate them, and you have to take ownership of their career paths as well. It can't be an arm's length distance. You have to be morally responsible and invested for them in their well-being and their outlook as well, because eventually they're supporting you in your cause. You have to behave like a true owner. Whether you are in investment banking, you're leading a certain franchise, you're leading a certain sector, or you are an operator over here leading a certain SBU or a platform altogether. You have to keep your people together. You have to keep them. You have to make them stay invested. And by invested, I mean truly invested. And it's not just for the sake of earning your monthly paycheck. It's all about, do you believe in the story or not, as a group or as a cohort. So that is very, very important. And these basic principles stay the same irrespective of the industry. It's industry agnostic. So you have to truly feel responsible for their own well-being. Then only they'll support you.
So, any small or big things which you would apply or do, to make your people feel that you're invested in their growth?
We
Any playbook that you have?
So it's a there's no secret sauce to it. It's an open playbook. Many of us have implemented this really, really well. So whatever you are communicating, be it in terms of their wealth creation, be it in terms of the eventual outlook and the outcome that they are going to get out of this entire endeavor, stay true to that. Don't offer them superficial things like offering paper ESOPs, for example. Doesn't really make sense, because then people start losing faith, and it spreads like wildfire. And then you as a platform, as an individual, will lose credibility. So हमने क्या किया था, हमने एक ESOP pool बनाया था for wealth creation. We were very meritocratic, and we were very quantified actually in the approach in which the entire allocation happened. So please don't leave out any gray areas, don't leave out any subjectivity, and don't show any signs of favoritism in doing this. Stay very, very factual, stay very, very objective in terms of awarding and rewarding stuff. And whatever you're promising, ensure that you end up delivering the same or a higher quantum in terms of that. Don't leave people shortchanged. And it's not about instant gratification or a long term gratification. It's about staying transparent and true to the cause. So that's how people will start investing in your cause. People will start aligning with you, and eventually you'll end up building a much larger stack. So we also started with two folks, three folks, five. But then the multiplier and the networking effect started kicking in for us as well, because whatever we had promised, we ended up delivering that, and people didn't get shortchanged. So they appreciated the fact, and then the alignment became far more robust. So that's the it's a very open playbook, but it's very difficult to implement, because eventually you'll say कि ये हो जाएगा ऐसे scale up हो जाएगा आपको ये मिल जाएगा. Ultimately you have to show that you care in whatever sense you're communicating it to them. Stay true to the cause.
Nice. So Piyush, tell me one thing. I think the stint that you have had, any 22-year-old will look at your career journey and would aspire to, kind of have a career journey like this. So if you have to advise, someone who's starting their career, what skills they should hone, how should they think, not from a career, standpoint, but typically what are the interpersonal skills that they should keep in mind when they are building their career?
I think we have covered this in bits and pieces. Again, discipline is very, very important. You might not be a rock star. You might not be the alpha in the group. But if you're disciplined enough, you can replace the alpha in the group, and that's very very important for all of us to understand and appreciate. Stay again, stay convinced with what you are doing. Stay true to the cause. Be patient. Be focus on the execution part, and follow it with proper discipline. Don't just try and circumvent stuff. Don't just try and take the fast track over here, because things will start falling in place at some point in time. At some point in time, you'll hit your inflection point where it'll skyrocket for you as well. So discipline, execution, and humility are the important factors for anyone to succeed. And this is very sector agnostic, whether you're starting on buy side, whether you're starting on sell side, whether you're starting on corporate, whether you're starting with a startup, or you're being a founder. It's very important. Inflection आता है, day one पे नहीं आता है. We all feel the chasm of going viral on day zero, right? But we all, I mean, you and I both know that it never happens like that. It takes some bit of groundwork, dedication, and conviction before we start looking at that particular uptick that we all desire. So patience is the word.
But
Patience is the virtue.
were you always a disciplined and a patient, person, or something
Not at all.
happened in your life which made you like this?
So I mean, there are no folklores about this, but I also learned the hard way. I had my own set of setbacks and failures before I got to internalize this entire GAN, because this is something that you realize and appreciate only in the hindsight once you have lived that entire journey. So it's not like one particular milestone changed me forever. So if I take a look back at my 15-16 years of career, this is something that I would truly appreciate now. That ठीक है, ये किया था, उसकी वजह से ऐसा हुआ, ये हुआ, and we all try and derive some narrative out of it. So my takeaway from my own personal journey is this: that patience or discipline are the biggest contributors to whatever little I've been able to achieve.
So,
For others, it could be very very different.
so what was that, moment, that click, that instance that happened in your life, which made you realize that no, I now need to kind of, get a little more disciplined than, what I was, or was it just a gradual shift?
No, campus taught me a lot of discipline, because it's an age old organization. It's a slow moving machinery. Otherwise, if you have to bring in any change over there, it was never supposed to happen overnight. So you have to consistently make your point, show the goodness around that point, stay objective, and then wait for that day when people would start eventually aligning. Yeah. So smaller deliveries, smaller wins, kind of celebrating those wins was a big moment. I'll give you an example around our D2C journey. When we started our D2C journey, it was about building out a team in West Delhi. Hiring talent for a D2C business in West Delhi is next to impossible. It's very very difficult for you to find the right kind of because the hub, the overall incubation happens in Gurgaon. All the fancy startups, the scaled up and the early age ones are all based out in this part of Delhi. People don't want to move out of an ecosystem or a hub and go and join in an area where there are no further opportunities. And everybody had their own social ecosystem also in this part of the world. So traveling for say 30 kilometers on one side was a big no-no for any Gen Z for that matter. And we needed that kind of talent as well, because they had a better understanding of content and alignment and relatability with the kind of target audience we were seeking at that point in time. So scaling up that business, giving them enough confidence that this is just a pilot that we are doing. Once we have enough money, we'll move out. And this is where you have to stay true to your commitments. So once we scaled up that business to a certain extent, we moved out to another office in we operated out of a Viva, despite being a well funded corporate with enough cash flows, more than enough cash flows. We still treated this business as a startup. We operated out of a WeWork for more than 2 years, because the idea was to keep the P&L and the profitability separate, and showcase it to the leadership that say we can stay afloat as an independent entity, and that's what gave them comfort. So while we stayed true to the fact that within 1 year, if we achieve a certain milestone, we'll get out of this place and we'll go back to your original ecosystem, which was true for the Gen Z stakeholders. At the same time, showcasing true profitability to the leadership and the founders was another completion of commitment that हमने ये बोला था, हमने ये कर लिया. Now we are moving on to the next stage, and we'll operate out of WeWork. We'll be very very frugal. We are not going to start burning incessantly, saying कि अब तो कर लिया, we have arrived now, let's do the fancy stuff, take the fanciest office in Gurgaon, in one of the DLF buildings, and start burning money helter skelter. That was not the idea. Idea was we have achieved a certain milestone in our journey. We aspire to go much higher. This is where all three elements came together. The trifecta happened. We not only stayed true to our employee stakeholders, the Gen Zs. We gave enough comfort to the founders, and at the same time, we started appreciating the virtue of discipline. That it's a journey. अभी 2 साल हो गए हैं. Another 1.5 years, we were more than able to double the business, which eventually helped in our public listing as well. And then we moved out to a bigger corporate office, which is now which has made much easier for us to attract the right kind of relevant talent in this ecosystem. So all three elements, we have lived through that journey, and people still stuck around in this business. There was hardly any iteration that happened, because at every single milestone, whatever you had promised, you kept on delivering very very objectively. ये होगा, आपके वेरिएबल जैसे पे आउट्स होंगे, देन यू विल बिकम एलिजिबल फॉर वेल्थ क्रिएशन इन टर्म्स ऑफ ESOP rollouts and things like that. So whatever we had promised at objective milestones, depending on who was responsible for what, and we kept it very broad based. We delivered that. And similarly for the founders, it was like, ये हमारा annual plan है, ये हमारा 3-year plan है, we'll hit this, then this is the kind of gratification we are looking to roll out. They also signed off saying that if you're generating this X, partaking a fraction of that is not a problem, because it's anyway superior to what we have been doing so far. Then if you hit this milestone, if you want to award something else to these guys, it's absolutely fine with us, because it's a much better performance in terms of operating leverage kicking in and things like that. So net aggregate, all the stakeholders were happy, which eventually led to a faster public market listing. So our original game plan was to hit the markets in 5 years. We, at a certain number, we were able to achieve 1.5 times of that number in 4 years time frame.
Wow.
And hence we went to the markets early on, and that gave us the confidence that in not so supportive markets, when back in March 2022, SEBI had changed the rules, so many rules on so many fronts, and people were very shy of opening the market out. We took that bold call and we said that come what may, we are going to open the market, and people supported us.
How do you, now when you look back at your journey, how do you feel about your journey?
Super gratified and thankful to all the people who have supported me in this journey. And I mean, it was a journey, end of the day, and it's been a super fulfilling one.
Any last message, anything that you have for our viewers?
Again, it's patience, 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 and discipline, discipline, discipline. I know this sounds very cliched, but this is the secret sauce for all of us. No overnight magic happens in this in the real world. So if you really want to create value for yourself and for your friends and your families and the broader ecosystem, stay true to the cause, be patient about it, and execute flawlessly with extreme discipline. So that's the only message I want to share with all the listeners here.
Thank you, Piyush. Great having you here and great chatting with you. I learned so much from this conversation myself. So thanks for taking out time.
No, thanks Swati for hosting me, and thanks for the entire endeavor. I wish you all the best with the game room
Thank
endeavor.
you.